Jeni Browne. Welcome to MFB News. Hope everybody's had a fantastic week and you have been enjoying the last droplets of summer and squeezing out every minute in that sunshine, because I think the weather is about to take a bit of a turn. Now, in terms of what we've got for you today, we're going to have a chat about what's been going on with swap rates, lender pricing changes, lender criteria changes. We're then going to be having a look at what's been going on with house prices, what's been going on with rental yields, and then finally we're going to be covering off the Rightmove Letting in Focus report. It's going to be an interesting week. There's a good chance that in spite of the fact that Angela Rayner has resigned, we are still expecting the Renters' Rights Bill to probably reach Royal Assent at some point either this week or next. And obviously we'll keep you posted on that. In terms of any last minute amendments, anything you're going to sort of witness that has been changed is going to be very, very minor, so kind of niggly bits rather than anything sizable. So I think the reality is that we are in for a kind of interesting ride. I don't think it's all bad, actually. I think there's going to be a period of real adjustment, but I know you guys are very agile creatures and you'll be absolutely fine, but we have all still got to wrap our heads around the changes and what they really mean for us. We'll try and help you through that as much as we can. But for this week, because we're not there yet, let's focus on other things which are more pressing right now. So first up, looking at swap rates and what's been going on there. So things have eased off ever so slightly compared to where they were this time last week. So to give you the picture, 2-year swaps as of last night, 3.64, 1 month ago, 3.64, and 1 year ago, 3.84%. So, you know, good news that they've come down a bit from last week. We're kind of back to where we were 1 month ago. Same story for 5-year swaps as well. So 5 years, 3.69. Last month 3.68 and 1 year ago 3.49. So basically month on month we're in pretty much identical position, and year on year we're just slightly worse off. But the good news is that the slight elevation that we saw in the last week has kind of edged off. Why is that? I mean, you know what? I've actually almost about to give up on trying to understand why things move around so much. Maybe the markets are really happy about Angela Rayner going, who knows? But actually, I think the main thing that really matters to you guys is that the slight increase we saw in swap rates has come away, which should mean that actually some of the pricing increases that we're going to talk about in a moment would have the capacity to essentially come back down again, which can only be a good thing for you guys as mortgage borrowers. Okay, and then that segues beautifully onto what's been happening with lender pricing changes. And basically, it's just been a massive round of lenders nudging up their pricing. Nothing massive, nothing to get frightened about. We're not going into another mini-budget horror. We have got the autumn statement at the end of October, start of November. But we have seen, nonetheless, some lenders move rates up ever so slightly. So Nottingham up by 0.1, BM up by 0.1, TMW up by 0.19, Lendinvest up by 0.1, NatWest up 0.15, Virgin up 0.05, Santander up 0.07, and Accord Mortgages up by 0.16. This is all just connected to the slight increase we saw in swap rates over the last week. So actually one could argue, and they've come back down again, so those lenders could, if they were inclined to do so, start bringing those rates back down. I don't think anyone's going to kind of rush to undo any changes they've made, only because things are a bit bumpy at the moment. And when a lender reprices, it's not kind of an instant thing. It's not they just kind of knock 0.1% off their interest rates and everything just changes. It has to go through a Treasury Department, compliance, marketing. You can imagine how these things become kind of a series of steps that have to be gone through, and therefore any pricing changes they're going to be wanting to make sure they're not going to have to make another round the following week to try and keep some consistency with where their rates are. So in terms of what we're expecting looking forwards, so again, I know there are lots of people who are still kind of really unsure what to do. Should I wait and see what interest rates do? Should I lock in now? I think you might see a slight softening of rates because of the change in swap rates over the next week or two, but it is going to be literally like 0.1%. We've seen, lenders repricing by 0.05. So these are really small amounts of money they're going to save you. I appreciate any saving, particularly at the moment when everyone is absolutely strapped for cash, makes a big difference. Don't forget that if you've made an application and your lender drops their rates down, you can change across to the new low rate for most lenders without any cost at any point before completion. So my kind of view on this would be get your application in, get a rate booked, I know I go on about this all the time, sorry guys, but I think it's really, really important. And actually then just keep an eye on the lender's pricing. They all publish them on their websites, and whether you're dealing with directly with the lender, with another broker, or preferably with us, if you're watching those lender pricing changes, you can just speak to the relevant party and just say, you know, can I take that new rate please? And there's no limit on the number of times you can change this either. So there you go, that's what's been happening with lender rates this week. Okay, now there's been one bit of lending policy change in the last week from a lender that most of you won't have come across on your travels, but I want to share it with you anyway, just because it's relevant and it could be helpful to some of you. So the lender who's made the changes this week is United Trust Bank, and United Trust Bank are relatively new to buy-to-let actually. So they've been lending for a long time. Lots of you would know them as a bridging lender, a development lender, but actually they moved into the buy-to-let market a few years ago now, and I think it's fair to say that they're really looking to win your business on criteria rather than on pricing. So they're a specialist lender. They're very good at things with people with larger portfolios, limited companies, all that kind of stuff. But the thing they really seem to kind of position themselves as being really great on is property types. So their kind of position is that they're not kind of bound by a very, very sturdy set of lending guidelines, i.e. we do not lend on flats over commercial, we do not lend on anything that says local authority. What they're going to do is really take a common sense approach to the resale of the properties, the possible resale in the event of repossession, which is ultimately what lenders are always thinking about. But because UTB are kind of very ingrained in property, because they've been a development finance lender and also a bridging lender, they kind of believe that they are able to make their own judgments about, you know, the kind of credit appetite they would have to lend on certain property types. So what this actually means in real terms is, if you've got a property where you'll find that loads of lenders are saying no to it because of the construction type, because of the location, that kind of stuff, UTB could be a really good option for you because they seem to be just more open to some of the kind of less popular types of properties. So what changes have they made to their lending criteria? So that landlords can now have an unlimited background portfolio. So whereas they used to restrict how many buy-to-lets you can have in the background, they're now saying, doesn't matter to us, you can have as many as necessary. So that's going to be useful to a very small number of people because the average kind of number of buy-to-lets in a portfolio I think is like 6 or 7, and they had that limit before. But actually for those of you who've got really large portfolios, these guys are now certainly an option for you to consider. However, they can only take on 6 of them. So no matter how many you've got in the background, there's no limit on that, but they could only lend on 6 of your properties. And the maximum lending limit has been increased to £2.5 million. So they have basically said, you know, whereas before they were capping their max lending, I think it was 1.5 million, they've increased it to 2.5. So they're kind of really saying, actually, we want to welcome on board more landlords to our lending books, which is really, really fantastic. Okay, now a little bit on house prices and what's been going on there, because there is some positive news in the market for those of you who already own property and like to watch the values of your investments move around, preferably in an upwards direction. So according to the latest house price report from Halifax, UK house prices edged up by 0.3% in August, bringing the average property value to £299,331. So house prices as an average across the UK are up by 0.3% in August this year. This marks the 3rd consecutive month of price increases and sets a new record for the average UK home price, despite a slowdown in annual growth to 2.2%. So house prices are now basically at a record high. First-time buyers saw some relief as average prices for this group fell by 0.6% since May. So the average price for a first-time buyer now starts at £237,577. And for those able to save a deposit, monthly payments on a 95% loan-to-value mortgage over 30 years could be around £1,179, which is below the current average private rent of £1,343. So we're kind of back to where we often are, we tend to be, which is where actually owning a property can work out to be more cost efficient than renting one. We went through a period of time a while back where actually renting became cheaper than buying because of the very, very inflated mortgage interest rates we saw over the last few years, and the fact that despite the fact that rents were increasing, they hadn't quite caught up with the rapid rate of mortgage payments. So mortgage payments or mortgage interest rates coming down a bit has kind of readdressed that balance. Now, regional data from the latest house price index shows that Northern Ireland continues to see the fastest annual growth, with prices up 8.1% year on year, although that does mark a slight slowdown from their previous month, and Scotland followed with Prices rising at 4.9%. Wales recorded a 1.6% annual increase, with average values in Wales at 227,786. Now, looking more on a macro level at England, the North East, the North West, Yorkshire and the Humber all posted growth above 4%. The South West, however, experienced a 0.8% annual decrease. The first region to see such a decline since Eastern England in July 2024. London remains the priciest region, no great surprise there, with average values up by 0.8% over the year to £541,615. So I think what we can take away from this is actually, in spite of absolutely everything that's going on, one of the things that you can kind of rely on, unless you have invested in the Southwest, is that you are seeing your investment continue to rise in value. Also, if you are thinking about investing, and believe it or not, guys, despite everything that's going on, there are actually lots of you who are investing at the moment, and we're definitely seeing an uptick in the number of landlords who are looking to add to their portfolios, which is amazing, and well done to those guys for kind of ploughing on through. Actually, you know, house prices, if they are going to continue to increase, and I think all the excuses for people looking to transact, I use the word excuses, it sounds quite negative, I don't mean it that way, but all the kind of reasons that people are coming up with, we think interest rates are going to come down further, probably not going to happen for a while now. We're waiting to see what's going to happen with taxation, where we've got the autumn statement coming up, so that's going to put that one to bed. So all the kind of things people have been waiting for are starting to go away, which will see a natural kind of increase in housing market activity, which will start to push prices back up again. So if you are thinking about investing, I would encourage you to start having a look at Rightmove to see what's on offer. Okay, and now we're going to have a look at the Rightmove lettings in focus report from August 2025. It is a pretty lumpy report, I'm not going to lie. So if any of you fancy having a read through, and it is really interesting, you can download it from the Rightmove website, but I thought I'd share with you the kind of headlines that I think are most relevant to you guys. So average advertised rents across Great Britain have hit a new high of £1,577 per calendar month in August, and that's 3% higher than last year. So rents have continued to increase, and this comes as a constrained supply continues to push prices up. So all the things that we kind of knew or thought were going to happen are coming true. So less properties for rent in the UK, which means that actually rents continue to increase. Now, what they go on to say in their report is that the imminent return to the table of the Renters' Rights Bill on Monday, that was last Monday, and the possibility of taxation on landlords' rental income, this is the national insurance thing we talked about last week, also looming in the autumn budget, continues to unnerve landlords, and understandably so. So Rightmove's Landlord Insight suggests that 1 in 3 landlords say they are considering exiting the market at some point, with 2/3 or 66% feeling unsupported by the government. And absolutely, you know, who wouldn't feel unsupported by the government at the moment? And not just this government, actually. I don't think, when I chat to landlords, nobody's saying, God, you know, Conservative are really big fans of landlords either. What's really interesting, and this is just anecdotally, when I'm talking to clients at the moment, the only party where people seem to feel there would be any kind of support for them is from Reform. And I think that's just very symptomatic of really how things are kind of going in the UK at the moment. Now, in terms of legislative changes such as new taxation and regulation, 68% of you feel frustrated by these changes, again, understandably, and that's driving some plans to decrease your property portfolio sizes over the next year. However, in the short term, half or 51% of landlords surveyed plan to maintain the size of their portfolio over the next years, and 1 in 5 are looking to increase it. So actually, I think a lot of you are kind of recognising that it's not a great time to sell property, basically. Good time to buy, not a great time to sell. So actually a lot of you are saying, you know, I'm just going to sit on this for another year, see how things kind of shake out, and then I'll come back to it and reconsider my options then. So I think that's really kind of reflected in the report that Rightmove have produced here. Now, in terms of rental supply has improved. The number of homes available to rent is now 8% higher than this time last year. However, we're still seeing an increase in rents of 3%. However, this is the lowest figure it's been in 2025, and the number of available homes to rent is still 27% below the same month figure as it was in the pre-pandemic, so 2019. So basically the market still hasn't really caught up with itself since before COVID, which is 6 years ago. Can you believe that? Regionally, rents are rising fastest in the Northwest, with average rents 10% higher than 1 year ago. So those guys in the Northwest are absolutely loving it at the moment. Slowest increases in London is 2%. where average rents are now 2% higher than they were this time last year. So London is always a bit of a slow burner. London did have a bit of a purple patch with rent increases though, so it kind of led the way with this, but things have slowed down a bit more now. So the latest picture of buy-to-let lending is also encouraging. According to this statement, the total number of buy-to-let loans given for residential investments in the first 6 months of this year was 16% higher than the first half of last year, and this is according to data from UK Finance. So what this tells us is that actually more people are looking for buy-to-let finance. So this kind of indicates that actually there's sort of some real more, greater movement in the market, which can only be a fantastic signal. So there you go, that's the real headline stuff. Lots and lots of data there. The report is very data heavy, but like I say, if you want to read it, you can just download it from the Rightmove website. It's really, really fascinating. And that, you lovely lot, is me done for this week. Thank you so much for having a watch, listen, read, however you choose to receive this. And I hope you found it helpful. And if you do have any questions, you are very welcome to drop us an email or online chat or leave a comment, whatever it is. Likewise, if there's anything you want us to have a talk with you about next week, anything that's kind of on your mind, anything you'd like to discuss, just drop us a comment. It's absolutely no problem at all. Have a fantastic week. May it all be kind to us. If the Renters' Rights Bill comes through, we'll obviously be covering that off. But I'm sure if it hasn't, there'll be lots of other things to talk about as always. Have a great week, and I'll see you same time next week.